Welcome to the Deep Dive. Today we're taking a look at a major player in the global pharmaceutical landscape, Sun Pharmaceutical Industries Ltd.
That's right.
We've pulled together insights from their latest annual general meeting, their Q1 FY26 financials, and a recent investor presentation.
Yeah, quite a bit of material.
Should give us a good picture.
Our goal really is to cut through all that data and distill the most important insights for you. We'll explore their financial health, strategic moves, how they're navigating, the global market.
Right.
So you can quickly get a clear picture of where this significant company stands.
So what does this all tell us about the broader pharma industry, and maybe more importantly, what's key for you to know about Sun Pharma right now? Let's unpack this. Okay, let's kick things off with the big picture. How did Sun Pharma actually perform in the first quarter of fiscal year 2026? What did the numbers look like?
Well, the first thing that jumps out is the strong top-line growth. Gross sales for Q1 FY26 were nearly 138 billion rupees,
Okay.
which is a robust 10.1% increase year over year.
10%, that's pretty solid growth.
It is. And it suggests they're, effectively capturing market share. It's not just about hitting targets. It hints at strong product acceptance, I think.
Right. And what about profitability? Did that growth translate down to the bottom line?
It certainly seems so. EBITDA came in at over 43 billion rupees,
Okay.
showing a significant 19.2% increase over the previous year.
Wow, 19%.
Yeah, which resulted in an impressive EBITDA margin of 31.1%.
31% margin, that's quite healthy.
Very healthy. And profit before exceptional items and tax also saw good growth, 16.6% up to almost 40 billion rupees.
Okay, but you mentioned exceptional items. I noticed those too, and they seem to impact the reported net profit quite a bit.
They did.
For our listeners, what exactly were those? Should we be concerned?
That's a really important point because reported figures can sometimes, mask the underlying performance, can't they?
True.
During the quarter, these exceptional items amounted to over 8 billion rupees. Now, this mainly included a charge for discontinuing development work on a drug candidate, SCD-044.
Ah, okay.
So that involved an impairment of an intangible asset, essentially writing down its value.
Right. Happens in R&D.
Exactly. And there was also a pretty significant charge, over 5 billion rupees, for the Taro GXM MDL settlement.
Ah, yes, the Taro settlement. That's been hanging around for a while.
It has. It related to past pricing practices involving their subsidiary Taro. But the good news here, or at least the clearer news, is that they've stated this balance is now fully accounted for.
So no more surprises on that front, hopefully.
That's the message. They don't expect further exceptional items on this specific account, so it clears a significant financial overhang.
Okay, so if we strip out those, those one-time charges, how did the adjusted net profit look?
Right. The adjusted figure, excluding those exceptionals, was nearly 30 billion rupees,
And that was up.
up a solid 5.7% year over year.
Okay, still positive growth then.
Definitely. And another strong point on the balance sheet, they ended the quarter with a net cash position of $3.1 billion US.
Wow, that's a substantial cash pile. Gives them flexibility.
Absolutely. A lot of financial flexibility there.
Now, something else really caught my eye in the financials. That foreign exchange gain.
Ah, yes.
It was over 2 billion rupees this quarter compared to a loss of about $500 million last year. That's a huge swing. What's going on there?
That is a significant swing, you're right. That Forex gain really underscores the impact currency fluctuations have on a global company like Sun Pharma.
Mm-hmm.
It suggests either favorable movements in the currencies they operate in, or maybe their hedging strategies are really paying off this time.
Or maybe a bit of both.
Could be both,
Yeah.
but it's definitely a key factor boosting their overall financial picture this quarter.
Interesting. It certainly adds another layer. And speaking of how they present themselves, I noticed a change in terminology this quarter. Global specialty is now being called innovative medicines. What's the thinking behind that shift? Is it just semantics?
I don't think it's just semantics, no. That's a crucial strategic signal from the company.
Okay.
Renaming specialty to innovative medicines officially reflects their increasing focus, their investment, their commitment to developing and bringing, novel, differentiated therapies to market.
So less about just specialty products and more about true innovation.
Exactly. It clearly positions them as a forward-looking company, emphasizing R&D and, intellectual property.
Right. Makes sense. So with that strong financial base and this clear strategic direction towards innovation, where's the growth actually coming from? Let's break down the segments. How's their home ground, India, doing?
India was exceptionally strong. Formulation sales there reached over 47 billion rupees.
Wow.
That's a remarkable 13.9% increase year over year.
13.9%.
Yes. And this segment now accounts for over a third, 34.2% of their total consolidated sales. So it's a critical driver.
Huge contributor. What's fueling that growth? Is it price increases or something else?
Well, they are ranked number one in India with about an 8.3% market share, according to the latest data.
Okay.
But what's really interesting, and you touched on it, is that their growth has been volume-led.
Ah, volume led, not just price hikes.
Exactly. And that's a significant differentiator because the broader Indian pharmaceutical market has been mostly price-driven recently.
Right.
So growing by selling more units rather than just raising prices suggests a really strong competitive position and sustained demand for their products.
That's a healthier way to grow long term, arguably.
I'd agree. Plus, they continue to be ranked number one by prescriptions across 13 different doctor categories, and they launched 5 new products in India just during the quarter.
So reinforcing that base
Oh,
constantly.
absolutely.
That volume led growth in India really does stand out. It feels more, I don't know, sustainable than just relying on price hikes.
It does.
But does that bring its own challenges? Like maintaining margins, perhaps, especially if competitors try to undercut them?
That's a very astute point.
Hmm.
Yes, volume growth often requires very efficient operations to maintain profitability. There's always margin pressure.
Sure.
However, for a company of Sun Pharma's scale and market leadership in India, securing that volume often gives them advantages in procurement, distribution.
Economies of scale.
Precisely. It sets them up for long-term dominance by building strong relationships with doctors and patients. That's harder to dislodge just with price cuts alone.
Fair enough. Okay, let's pivot across the globe then. How did they fare in the U.S. market?
The U.S. formulation sales reached $473 million,
Okay.
which contributed about 29.3% to total consolidated sales. So still a very important market.
Definitely. And growth.
Growth was slower there,
Yeah.
1.4%, and that growth was primarily driven by their innovative medicines portfolio.
Ah, connecting back to that name change.
Exactly. Products like Ilumya, Sequa, Winlevi, Odomzo, those are the ones driving the U.S. growth now. They're key to that new strategic direction.
Right. But I did hear or read about some headwinds in their U.S. generics business.
Yes, that's correct.
How effectively can new launches really offset those pressures, especially for something like lenalidomide, which has seen so much competition and pricing pressure? Is that sustainable?
Well, their generics business definitely faced declines. Increased competition, you hit it right there with lenalidomide, continued pricing pressure. That product in particular has seen a lot of new entrants.
Tough market.
Very tough. Now, new generic product launches, they had 4 in Q1. They definitely helped to partly offset this. But it's a constant race in the generic space, isn't it?
Always chasing the next launch.
Pretty much.
Yeah.
The long-term sustainability really hinges on their ability to consistently bring new, complex generics to market where competition isn't quite as fierce,
Right.
or, as we're seeing, pivot effectively to more innovative products.
Which seems to be the plan. Okay, speaking of new launches and innovative products, what's the story with Listelvy? I saw that name pop up.
Ah, Leqelvi. Yes, they recently launched that in the United States for severe alopecia areata.
Okay, hair sauce treatment.
Severe hair loss, yes. And this is a significant milestone for their innovative medicines portfolio. It's a targeted, novel therapy for a condition that, frankly, had limited options before.
So potentially filling an unmet need.
Potentially, yes.
Yeah.
Represents a real step forward. They also announced they settled patent litigation related to Listelvy.
Oh, that's good news for them. Removes uncertainty.
Exactly. Clears the path, allows them to focus on market penetration, and the initial reception seems positive. Early commercial prescriptions are happening, and they say discussions with payers are encouraging. They're aiming for coverage comparable to competitors.
Okay, one to watch then. What about manufacturing? Any updates there, especially regarding U.S. FDA approvals? That's always critical for supply.
It is. The company did note that 3 facilities, Mohali, Gadra, and Howell, are currently under U.S. FDA warning orders.
Okay. Not ideal.
Not ideal, definitely something to keep an eye on. However, other critical facilities, including ones in Europe like Baska and Ulm, Hungary, and others supplying the U.S. market like Haifa, Brampton, and Jerica in the U.S. itself, they continue to supply and are in compliance.
So diversification helps mitigate the risk there.
It does. That diversified manufacturing footprint is key.
Makes sense. How about that innovative medicine segment globally, beyond just the US?
Global innovative medicine sales grew by a robust 16.9% to 311 million US dollars in Q1 FY26.
16.9% growth globally for innovative meds.
Correct. And that makes up 19.3% of total consolidated sales now.
Almost a fifth of the company.
Yeah, it clearly highlights the accelerating importance and the growing revenue contribution of this segment across all their markets.
Okay. And what's new in the R&D pipeline that's feeding this?
Well, a significant development. Two phase 3 clinical studies for Ilumya, specifically for active psoriatic arthritis, met their primary endpoint.
Ah, Illumia again. That's already approved for psoriasis, right?
Exactly. So this new data supports potential regulatory submissions, U.S., other markets for additional indication.
Expanding its use.
Right. The company is hoping to file before the end of this calendar year. They expect maybe a 10 to 12-month approval timeline after filing.
And they think uptake could be fast.
They do. They anticipate a faster ramp-up for this new indication because doctors already know the drug, they have existing access, and it's relevant for about 30% of psoriasis patients who also get psoriatic arthritis.
So it significantly expands the potential patient pool for an existing drug.
This is
Smart.
very smart.
And what about that acquisition, Unloxated? What is that exactly, and how does it fit in?
Right, the acquisition of Checkpoint Therapeutics was completed in Q1. That brought Unloxated into their portfolio.
And Unloxated is?
It's an FDA-approved anti-PD-L1 therapy, so it's a type of immunotherapy.
Okay, cancer treatment.
Yes, specifically for cutaneous squamous cell carcinoma, a type of skin cancer. They're planning its U.S. launch in the second half of FY26.
And how does it fit strategically?
What seems smart here is their plan to leverage the overlap in prescribers with Adomzo, another oncology product they have.
Ah, physician overlap. Makes the launch potentially more efficient.
Should do, yes. They can use their existing sales force relationship.
Right, got it. Okay, let's look beyond the big markets of US and India. How did emerging markets and the rest of world perform?
Emerging markets formulation sales were 298 million US dollars, up about 5.1%,
Okay.
contributing 18.5% of total consolidated sales. And they saw strong growth in large markets like Romania, Russia, South Africa. So pretty diversified strength there.
And rest of world.
Rest of world sales increased by 15.5% to 219 million US dollars. That's 13.6% of consolidated sales.
15%, that's strong growth too.
It is, though it's worth noting this included some one-time sales events that boosted the numbers a bit.
Ah, okay. Good caveat. And what about their API business, active pharmaceutical ingredients?
Right, the API side. External API sales were over 5.4 billion rupees, up 9.3%.
Still growing nicely.
It is. And this segment might seem less flashy than, the finished drugs.
Sure, it's behind the scenes.
But it's strategically crucial for Sun Pharma. It underscores its importance for backward integration, meaning they control more of their own supply chain.
Which gives them reliability.
Exactly. Ensures supply reliability for their own products.
Yeah.
That's a major competitive advantage, especially these days.
Very true. Okay, so beyond the impressive numbers and segment performance, what strategic moves are shaping the company's future? I saw a big leadership change that definitely caught my eye.
Absolutely. That was significant news. The chairman, Mr. Dilip Shanghvi, announced he's transitioning from the role of managing director.
Right. He's staying as chairman, though.
Yes, staying as chairman. But Mr. Kirti Ganorkar is taking over as the incoming managing director, assuming shareholders approve.
And he's an internal hire.
Very much so. Been integral to the company for 3 decades, apparently.
30 years. Okay, so he knows the company inside out.
Presumably. So this isn't just a new face. It really marks a new era in operational leadership. Having Mr. Ganorkar, who deeply understands Sun Pharma's operations and culture, step into the MD role suggests strategic continuity, but maybe with a fresh operational focus.
Interesting dynamic. And Mr. Valia retired, too.
Yes, Mr. Sudhir Valia also retired from his non-executive director role. So some changes at the board level, too.
Okay. So given these leadership shifts and that renewed focus on innovative medicines we talked about, what does their longer-term growth strategy look like now? What are they telling investors?
Well, for the current fiscal year, FY26, the company is aiming for mid to high single-digit consolidated top-line growth.
Okay. Seems reasonable.
And their focus areas are pretty clear now. Definitely enhancing the share of that innovative and branded business.
Right.
Continuing to develop complex generics where there's maybe less competition. And maintaining leadership in their key existing markets, like India.
Makes sense. Anything else stand out strategically?
Yes, something quite significant. They confirmed plans to be in the first wave of GLP-1 product launches in India.
Ah, the GLP-1s. Huge market potential there.
Exactly. For our listeners, these are those highly talked about drugs, often used for diabetes and weight management. Being an early mover there, especially in a massive market like India, well, that could be a huge strategic play.
Tapping into a rapidly expanding therapeutic area? Very interesting.
Definitely one to watch.
And how are they balancing all this ambitious growth with, sustainability? ESG is increasingly important.
It is, and they seem to be putting effort there. They were included in the S&P Global Sustainability Yearbook for 2025,
Okay.
which apparently places them among the top 5% of global pharma companies on ESG performance.
Top 5%, that's notable.
It is. And for a pharma company, this kind of commitment isn't just, good PR.
No, it can have real benefits.
Right. A strong ESG rating can attract talent, secure partnerships, even open doors to certain investment funds. It translates into tangible, long-term value.
And specific examples.
They mentioned sourcing 38% of energy from renewable sources and reducing Scope 1 and 2 emissions by 18% since 2020. So concrete steps.
Good to see. Finally, let's touch on their R&D investment and global footprint. That's usually a good indicator of future potential.
Absolutely. Total R&D investments for Q1 FY26 stood at over 9 billion rupees.
Which is what percentage of sales?
6.5% of sales, and importantly, 41% of that was specifically allocated to innovative R&D.
Okay, so a significant chunk going towards that new focus.
Exactly. This continued investment is what fuels their pipeline. They mentioned 6 novel entities currently in clinical stages.
6 new potential drugs.
Right. And on the generic side, a robust portfolio too, 119 NDAs and 13 NDAs awaiting U.S. FDA approval.
Wow, that's a lot in the pipeline. Just to remind listeners, NDAs for generics, NDA for new drugs.
Correct. The sheer volume of applications really speaks to their continuous development efforts. And globally, they operate 40 manufacturing facilities across 6 continents.
Truly global scale.
It is. And their workforce reflects that too, growing to over 43,000 employees worldwide.
Okay, quite a picture. So wrapping this up, what really stands out to you from this deep dive into Sun Pharmaceutical Industries? We've seen a company, expertly navigating complex regulations, making big leadership changes, really pushing into innovative medicines, all while keeping the financials pretty strong.
Yeah, I think if we connect this to the bigger picture, it really highlights the constant evolution happening in the pharma industry. That strategic shift toward innovative medicines, which we see not just here, but elsewhere too, coupled with strategic acquisitions like Checkpoint, and that strong focus on emerging markets. It really points to a dynamic future, not just for Sun Pharma, but arguably for global health innovation overall.
It does raise an important question, maybe for you, our listener, to consider. Given Sun Pharma's strong financial base and this clear pivot towards innovative medicines, what do you think will actually be the most impactful development for them in the coming year? Will it be their expansion into these new high-growth areas like the GLP-1s, or will it be continued strengthening in their core markets like that volume growth in India, or navigating the U.S. generic scene?
That's a good question. Where will the biggest impact come from?
Something to mull over as you continue your journey to being well-informed?